We've all been there. You buy a delicious burrito expecting a fiesta and bam! Bland beans, dry rice, sadness. That's what overpaying on property taxes feels like. You expect fairness, but instead you're stuck with a bad case of taxation. So, how do these property tax wizards determine your home's value? They use three main methods, each with its own set of quirks and potential pitfalls. First up, we have the cost approach. Imagine building an exact replica of your house from scratch. The cost approach factors in the price of land, materials and labor. It's like playing The Sims, but instead of virtual money, you're dealing with real-life tax implications. Next, we have the income approach. This method is all about the Benjamins your property could potentially generate. If you rented out your house, how much could you realistically charge? The income approach considers rental rates, vacancy rates, and operating expenses to determine your property's value. Last but not least, we have the sales comparison approach. This one's all about comparing your property to similar ones that have recently sold in your area. It's like online dating for houses, but instead of swiping right, they're comparing square footage and bathroom fixtures. Each appraisal method has pitfalls that can lead to overassessment. The cost approach can be skewed by fluctuating material costs. The income approach can be thrown off by unrealistic rental expectations. The sales comparison approach can be influenced by inaccurate property data. Look for red flags like a sudden increase in your assessment. Pay attention to discrepancies between assessed value and market value. If you suspect overassessment, gather evidence. Section 4. Leveling the playing field, equal and uniform assessments. Now, let's talk about fairness. The bedrock of a just property tax system is the principle of equal and uniform assessment. This means that similar properties should be assessed at similar values, regardless of who owns them or what their political connections might be. Unfortunately, this principle isn't always upheld. In some cases, assessors may undervalue properties owned by cronies or political donors, shifting the tax burden onto the backs of everyday homeowners. Other times, assessors may simply lack the resources or training to accurately assess properties, resulting in widespread inaccuracies and inequities. To ensure a level playing field, it's crucial to hold assessors accountable for their decisions. This means demanding transparency in the assessment process, challenging unfair assessments through appeals, and advocating for reforms that promote accuracy and fairness in property valuations. Section 5. Think you're overpaying? Fight back. If you believe that your property has been overassessed, don't just roll over and accept it. You have the right to appeal your assessment and fight for a fair shake. Start by gathering evidence to support your case, such as comparable property sales data, independent appraisals, or documentation of any errors on your assessment notice. Contact your local assessor's office and request an informal review of your assessment. If that doesn't resolve the issue, you can file a formal appeal with your local Board of Review or Assessment Appeals Board. Be prepared to present your case clearly and persuasively, and don't be afraid to seek professional help from a qualified property tax consultant or attorney if needed. Remember, you have the power to fight back against unfair property tax assessments. By understanding the appraisal process, recognizing red flags and taking action when necessary, you can ensure that you're paying your fair share and no more.